Omicron is still spreading at an unprecedented rate all over the world today as we speak. The WHO have warned that the pandemic is nowhere near over at this moment. Endemic may thus mean differently across countries, whether they will be living with the virus or to fight against it. In the US economy, the demand is returning strongly, and many sectors affected by the pandemics are getting back to normal. Policymakers have very few reasons to continue the same economic stimulus as last year. In fact, apart from the PBOC, central banks of developed countries have started to taper or increase interest rates. This is certainly effective for curbing inflation and avoid it getting out of control. However, it also means that it will be harder for investors to look for growth opportunities as bond yields will rise. We believe in an inflationary environment, investors should underweight cash and overweight assets that will benefit from inflation. Given the current scenario, we still believe equity as an asset class has better value over fixed income and expect moderate equity returns in developed markets. Although stock picking will become more challenging this year as interest rates are rising, we continue to have high conviction to good quality industry leaders. Emerging markets, especially China onshore market, are experiencing a very different situation than developed markets. More stimulative policies are on the way. We are expecting more policy easing this year to cushion an economic slowdown in mainland China. As stock valuations are currently at reasonably low level, this may translate into relatively higher equity return later this year. Other than equities, investors can also pay attention to alternative assets, which are relatively less correlated to traditional asset classes and have potentially higher returns. Private credit, private equity, hedge funds, and properties are some good examples of alternative assets. In this highly uncertain environment, high net worth individuals should always be attentive to the factors which may affect their daily lives and wealth position, such as the health and stability of income. The coronavirus pandemic is still a very concerned topic for everybody, and it can change our wealth position quite drastically if we are not well prepared. Thus, apart from investments, wealth planning in a preemptive way should be undertaken as soon as possible.